Welcome to this chapter, where we will review key financial reports. Our focus will be on the trial balance and the balance sheet, reflecting the cumulative effects of previous transactions, including the most recent customer payment and prior entries. In addition to the financial reports, we will examine key controlling reports, such as cost centers actuals, analyze order, and market segments. These reports provide insights into departmental costs, production order efficiency, and profitability analysis, helping to monitor and allocate resources effectively. In this chapter, you'll gain a clear understanding of how these reports interconnect and how each transaction influences the overall financial performance, enhancing your ability to make strategic and data-driven decisions.
In this screen, we return to the trial balance view to analyze the financial impact of the transaction. This step prepares us to compare the account balances before and after recording the payment. This view shows the trial balance before refreshing to include the recorded payment. At this stage, the customer receivables account, 121,000,000, displays an outstanding balance of €24,200, reflecting the total amount due before any clearing transactions have been applied. After refreshing the trial balance, the updated balances are displayed. The customer receivables account, 121,000,000, now shows a reduced balance of €22,000, confirming the successful clearing of the €2,200 payment. This confirms the accurate reflection of the transaction on the financial records. In this figure, we navigate back to the main menu to initiate the review of the financial statement. This ensures that we access the updated data following the transaction posting. Here, we select the Financial Statement option to view the balance sheet and income statement. This option directs us to the specific report overview for our company code. In this figure, the financial statement is displayed, showing the updated balance sheet and income statement after the recent transaction. This view reflects the changes in the bank account balance and accounts receivable due to the payment posting. Finally, in this figure, we use the download option to save the financial statement locally. This step ensures that the report is readily available for further analysis or documentation purposes, supporting audit trails and future references. Before diving into the report, it's essential to remember that we are analyzing a balance sheet, which is divided into assets and liabilities. Assets represent everything the company owns or expects to receive, while liabilities reflect its obligations or amounts owed. Let's explore each section. Assets. Current cash and bank balance. Under 4. Checks, cash on hand deposit. The current balance is negative €1,410, recorded under account 111,000,000, labeled as bank training, no cash. This indicates a negative position, suggesting that the company is using an overdraft facility or operating with a deficit. Accounts receivable. The section for receivables and other assets now shows €22,000, representing amounts owed by customers, recorded under account 121,000,000, labeled as receivables domestic. This reflects an increase compared to the previous balance. Stocks. The section labeled as stocks remains unchanged, with €2,700, representing the value of raw materials available for production. Total current assets. Summing up these items, the total current assets now stand at €23,290, reflecting a significant increase due to adjustments in accounts receivable. Liabilities. Under the Capital and Reserve section, the recorded profit is €21,400. This value is listed as a liability because it will either be distributed to shareholders or reinvested in the business. Other obligations. The payable section includes €1,890, mainly related to taxes. This amount is divided into €310 of input tax, which is recoverable by the company, and negative €2,200 of output tax, which represents taxes payable. Total liabilities. The total liabilities amount to €23,290, perfectly balancing with the total assets. Profit and loss statement. Revenue. The total revenue is €22,000, recorded under account 41 million, labeled as revenue domestic product, representing sales of products during the period. Cost of goods sold. The total cost is €600, divided into three categories: material consumption at €300, personnel time at €200, and machine usage at €100. Operating result. Subtracting the total costs from revenue, the operating profit for the period is €21,400. This amount is carried over to the balance sheet as accumulated profit. We return to the main menu to access the starting point for cost center analysis. This step highlights the navigation path within the SAP system to demonstrate how to locate and begin working with the management accounting section. From the management accounting section, we select the Cost Center's Actuals report. This report allows us to analyze departmental costs, focusing on tracking and understanding cost absorption and allocation within the organization. In this screen, we begin configuring the report by setting parameters such as the ledger, fiscal year, and company code. The Cost Center's Actuals report provides a detailed view of costs allocated to each cost center, enabling us to monitor and analyze departmental expenses effectively. After entering the relevant parameters and running the report, we observe a summarized view of cost center activities. The report is structured with multiple dimensions on the left-hand side for deeper analysis. These dimensions can be filtered and expanded thanks to the Universal Journal architecture, which consolidates all financial and controlling data into a single source of truth. This integration ensures consistency and facilitates advanced reporting capabilities. By expanding the report, we analyze the detailed cost movements within the selected cost center. Initially, the report shows the debit entries, representing costs allocated to the cost center. Subsequently, the credit entries appear, indicating that these costs have been absorbed by a production order. The final result shows a zero balance for the cost center, confirming that all costs have been successfully allocated to production. This concludes the departmental cost example by demonstrating the complete cost flow. Here, we navigate back to the main menu of the SAP interface. This step serves as a transition point to select the next area for analysis, focusing on the production order and its associated costs. In this screen, we select the Analyze Order option under the Management Accounting module. This option allows us to evaluate the cost trends and quantities linked to a specific production order, providing detailed insights into cost absorption and allocation. In this figure, we input the production order number into the Report Object field. The production order serves as the key identifier for tracing material consumption, activity allocations, and goods movement. Here, we click the Execute button to generate the cost trend report for the selected production order. This action initiates the analysis, presenting detailed cost breakdowns and transactions. This figure displays the final report summarizing the actual cost column, which highlights the total costs incurred during each stage of the production process. This comprehensive view demonstrates production efficiency and cost absorption, confirming that all costs have been accurately tracked and allocated. The report details raw material consumption. Represented under the transaction type goods issue, this line captures the costs of materials consumed in the production process. These costs are directly attributed to the production order. Activity allocations. This section reflects the costs associated with machine time and personnel hours utilized during production. These expenses, which were initially recorded in the cost center, are systematically transferred to the production order through confirmations, ensuring precise cost tracking and absorption. Goods receipt indicates the transfer of the finished product to inventory, marking the conclusion of the production cycle. This step consolidates all previously recorded costs into the inventory valuation. Summary. The actual cost column effectively integrates the financial impact of raw material consumption, activity allocations, transferred from cost centers via confirmations, and goods receipt. This ensures a clear and detailed analysis of the production process, providing visibility into cost management and operational efficiency. In this figure, we navigate back to the main menu to access the Profitability Analysis functionality. This step demonstrates the modularity and organization of the SAP interface, enabling users to seamlessly switch between financial and managerial reports. Here, we select the Custom Profitability Analysis tile, which leads us to the Profitability Analysis reports. This functionality allows the user to evaluate the financial performance at a granular level, enabling deep insights into product, customer, and profit center performance. This report provides a detailed analysis of profitability by customer and product. It leverages the Universal Journal, which consolidates financial and controlling data into a single source of truth. Key points to highlight. Profitability Analysis (COPA) report utilizes dimensions such as customer, product, and account, all made available through the Universal Journal. This integration ensures consistency and eliminates data redundancy. The report breakdown includes the following. Customer Analysis. The report shows customer 001 consuming finished product 001 and service 001. GL accounts. For each product, the report details GL account entries, such as revenue and costs, directly tied to the profitability of these transactions. Profitability Insights. Users can now analyze profitability by account, customer, or profit center. This includes metrics such as contribution margins and cost structures, all streamlined through the Universal Journal. This report exemplifies the powerful reporting capabilities of SAP, enabling users to design tailored reports that align with specific business needs. With the Universal Journal, SAP ensures that reporting is both accurate and comprehensive, providing actionable insights for decision-makers.
Let's take a moment to review the key elements of financial and management accounting that we explored in this training. We'll walk through each section on this screen, highlighting what we learned step by step. Starting with General Ledger under Financial Accounting. The General Ledger forms the backbone of financial reporting. It consolidates all journal entries to provide an overview of the company's financial transactions. Within this module, we use the Manage GL Account Master Data app to maintain essential information for each account, such as descriptions, account groupings, and currency settings. This ensures that our accounts are correctly configured for reporting purposes. Next, we use the Post General Journal Entries app to create manual postings, recording key financial transactions directly into the system. These postings included debits and credits that updated the account balances in real time. Moving forward, we examined the trial balance. This report presented a summary of all account balances, allowing us to verify that the debits equal the credits. This was crucial for ensuring the accuracy of financial records. Finally, in the General Ledger section, we reviewed the balance sheet and income statement. These reports provided insights into the company's financial health, highlighting assets, liabilities, revenues, and expenses. Now, let's look at accounts payable. Here we began with the Create Incoming Invoices app, where we documented supplier invoices, some originating from procurement processes and others posted directly in financial accounting. This ensured that we tracked all liabilities accurately. We then explored the Manage Supplier Line Items app, which gave us a detailed view of open and cleared supplier transactions. Although we didn't explicitly use the Display Supplier Balances app, the Line Items feature allowed us to identify balances at a granular level, supporting our analysis. Next, we demonstrated how to process payments using the Post Outgoing Payments app. This app facilitated the clearing of outstanding invoices, ensuring that supplier payments were recorded accurately in the system. Switching to accounts receivable, we reviewed the Manage Customer Line Items app, where we monitored open invoices and payments received. This feature helped us reconcile customer payments efficiently, ensuring that customer balances remained up to date. Similar to the supplier section, we leveraged the Post Incoming Payments app to record and clear payments received from customers, further reinforcing the importance of maintaining accurate cash flow records. Finally, we explored management accounting. This section began with the Cost Center's Actuals report, where we analyzed the costs allocated to different departments. By understanding cost absorption, we ensured that all expenses were properly tracked and allocated. We then reviewed the Analyze Order report to track the costs of production orders. This report provided a detailed breakdown of material consumption, machine time, and personnel allocations, helping us evaluate production efficiency and cost control. To conclude, we explored the Market Segments Plan Actual Report, which belongs to the Profitability Analysis (COPA) module. This powerful report enabled us to analyze profitability by product, customer, and profit center, giving us insights into the financial performance of various business segments. Together, these reports and apps form a comprehensive toolkit for managing financial and managerial accounting within SAP. You've seen how each component contributes to a detailed and accurate financial overview, empowering you to make informed decisions. Congratulations on reaching the end of this incredible journey. You've navigated through each chapter, mastering essential skills in financial accounting and controlling. It's been a privilege to guide you every step of the way, from our first look at the general ledger to the in-depth reports that revealed the bigger picture of your financial processes. Dr. SAP isn't just a guide. It's been an honor to be your companion, sharing insights and celebrating your progress. I hope you've enjoyed this experience as much as I've enjoyed leading it. Remember, knowledge is a powerful tool that grows with practice. So whether you're posting journal entries, analyzing reports, or making strategic decisions, you now have the confidence to succeed. If you found value in this course, I'm sure we'll meet again, maybe in another training or for the next exciting chapter in your SAP journey. Until then, I'm wishing you every success in your professional growth. Take care, keep learning, and remember, you're never alone when it comes to mastering SAP. Dr. SAP is always here to cheer you on. See you next time.